Good evening, everyone, and welcome to the Intermarket Report for the week ending Friday, 15th June 2018. So we have today's data also in the analysis. And well, without any further ado, let's jump into what we see on the Indian markets. And what is very, very clearly there is just like we discussed in the previous IMR, which we did 4 or 5 days back on Monday. The market is overall, the Nifty index is going sideways, and after a 2-day correction, or a small dip rather, not really a correction, on Wednesday, Thursday, today a little bit of a sideways move, a green candle, recovered a bit intraday, but really nothing significant at all. From the multi-week, multi-month picture, very much an overall range-bound market, and that definitely very much remains the same. Also, just to keep in mind, just to bring in some, let's say, global news as we speak, there is this banner on CNN that Trump approves 25% tariffs on $50 billion worth of Chinese goods, which is actually, in the bigger scheme of things, 50 billion is not really much. But the fact that he has finally gone ahead and put tariffs is something very significant. And then you have this breaking news saying Beijing responds to Trump tariffs, and the US has launched a trade war as far as China is concerned. So, well, it could really, really be interesting times ahead, of course. And the markets are definitely going to be affected by this, and we have been saying since the past IMR that, well, there is not much of a upside bias, rather more a downside bias in the system, and we will review that when we do the sectoral indices in a little bit. But when you look at the news and other factors, then this is definitely one more issue to be kept in mind. So the global geopolitics is getting from bad to worse, and this trend is likely to continue, and therefore, if the global markets do react negatively to that, we can definitely expect. So, when the market is, like I keep saying, the market is looking for an excuse or a trigger to do whatever it already has decided that it wants to do. So there'll be something or the other. The Trump-Kim summit came and went. In terms of the market, a non-event almost, in spite of all the bravado and the big news. And now we have this. So there's nothing, greatly positive that is there as far as I know, as far as reasons or events are concerned to see why the market would go up. There seems to be more of a tilting towards a downside in terms of events and biases. In terms of technicals, well, just the same thing. So the short strangles that we had discussed in the previous IMR, those approaches to the market still remain very valid. I don't know if any of the IMR participants took the advantage of that discussion and applied those strangles. If you had, you would have made some money. And remember that we are getting into the last 2 weeks of expiry, where the time decay is going to be much faster, and therefore strangles will start making money on a faster basis, of course, assuming that the underlying view holds. So sideways view for the Nifty, and nothing much more to say on that. The top side, 11,150, is the immediate resistance. For now, looks unlikely to break, at least when I say for now, this month or this series. And on the lower side, about 10,100, even 10,300 is seems to be something that is going to not break, at least for now. Coming to the Nifty Next 50, well, we have the downtrend, like I already mentioned, very much in place. The downtrend, as you can see, accelerating a bit today in the sense of the Nifty Next 50 has a green candle, the Nifty does not. So we kept saying this also in the last week that the large caps are still managing to keep their head high, but the smaller companies, their trends are definitely reversing, and you can see this in this line where the downtrend has accelerated a little bit. The angle of the line is a little steeper, right? So that's the next space that also is getting weaker. Coming to the broad market in terms of the Nifty CNX 500, sorry, the breakout of this triangle, well, not yet happened, may happen. There was some attempt day before yesterday, a sort of a poke up, but no sustenance about that. And right now at a very interesting place, as in, is it going to break out or is it going to break down, right? So strictly speaking, we are still in a long-term uptrend, and from terms of follow-up, or breakout should happen. But right now, there is no reason to or evidence on the charts to say a breakout is likely to happen, right? So it could very well just keep coming down. So 1, 2, 3, 4, yeah. So probably there's one more move down here that could happen perhaps, and then maybe it'll break out or break down, we'll see. But right now the bias is down. So overall, broad and narrow market, large caps, mid caps, etc., all looking, I would say, sideways to bearish. Coming to the sectoral indices, starting with the Bank Nifty, that also very much sideways. So the Bank Nifty short strangle that we discussed last week would still hold, still make money, and you can still apply those strangles, short strangles, if you like, right? Short the 27,500 or the 27,000 call, and short the 25,500 or the 26,000 put. 26,000 put, I think, is a little too risky. Maybe the 25.5 or even the 25.2, maybe more than one or two lots or multiple lots is something one can consider. Small triangle here, teeny weeny one, which could which has its own, of course, small implication, and move from 27.2 to over 21,000 points up or down. So we'll have to wait and watch what happens. All right, in today's volume, you can see an uptick in the volume after consolidation for 2 days. So again, downward bias is very much visible. Looking at the PSU Bank Index, which, as I said, has been languishing. So this is, trying to rally, but really not able to. 200-day moving average is right there, and the overall big picture very much the same. Again, the bias is probably down, but really nothing more than that, right? So that, coming to the sectoral indices, looking at autos, just going in an alphabetical order this time, and well, what you'll see, I hope you've already noticed, is that almost all the indices so far, the composite of broad market indices, multiple sectors, all have their long-term moving averages bunched around where the price is right now, or rather, the price is around where all the long-term moving averages are. And this is pretty significant because this whole bunch of support or resistance, as the case might be, in this case support, that could either hold or break. And when something decisive like this is there, market action can take a very decisive move once the market decides what to do. So in this case, like you could say, from almost maybe Feb of this year, markets have been playing around with these moving averages, the long-term ones, and they have been becoming tighter and tighter in terms of the range that they traverse. And this is probably just going to continue till some very clear-cut signal emerges. And like I said, again, no reason to see what that clear-cut signal is, or at least nothing visible to me. And if there is no reason for the market to go up, that's enough for the market to go down, right? All right, so autos sideways to bearish, capital goods, so again coming down to this neckline, right, and a very important support, as you can see, right from April of last year. Okay, from April of last year, so more than a year it's been around this, either up or down. And well, by all intents and what's looking in the market, looks like it might break. But till it does, we can't be sure, of course. So watch this 18,000 level very carefully. It's of course broken through the long-term moving averages. See how the 150-day moving average is right there. Could not, if the price could not breach that, very solid supports they've become. Now they've become very solid resistances. There were supports here, as you can see. Now they become very important resistances, and this key support, if it breaks, its capital goes down for sure. FMCG, so that's one thing, like we said in the last week, continuing the same thing. FMCG, IT, pharma are the ones which are still holding their head high, but I would right now say holding their head high just barely, really nothing convincing or compelling, in my opinion, is there. And so we'll just have to again wait and watch on this. Only thing about FMCG, looks like the rains and monsoons are very good. Lots of heavy rains across. Of course, we'll need more time to see. So the rural economy is something that could be positively affected by FMCG, but too early by the monsoons, and therefore positively affect the FMCG. But it's a little too early to say anything on that. Coming to the metal index, well, that was metal and power was one thing we said. Head and shoulder tops, you can see that there very, very clearly. Today, finally, one big breakdown. And again, from July of last year, so almost 1 year, head and shoulder, if this breaks down, and notice the moving average is all trending down and turning down, a big down move is definitely in the works. It will be really interesting to see, and if it can break out of this downtrend. I doubt it, very, very unlikely in my opinion. And it's just a matter of, so this is a really good probably metal space, something really sweet short, because in terms of measuring implication, you're talking about 16,000 to almost 13,000, 3,000 points. That's massive. That's almost like 15% down, and from this to all the way to 10,000 here could take the next 3-6 months, you never know, but 15-20% down on the metal space is looking like a distinct possibility, and this is definitely a worthwhile short to keep in mind. Power index, we already mentioned short. You can see the evidence and follow through, right? So we did this on Monday, the session, yeah, here, and then 2 days of sideways, and then yesterday, today, power has come down as expected. So anyone shorting it, and we didn't discuss any specific power shorts, but we did mention the names in the part 2 of last week's IMR. And like you say, the proof is in the pudding, is in the eating rather. Realty index, again, you can see the downtrend over about 7 months, 7 months downtrend. You have this as a longer term downtrend, and it is of course composed of smaller ones. So big secondary or primary downtrend here, lower top, lower bottom, all these are secondary waves, and then these are your minor waves. So a clear downtrend, turning off moving averages. This is very likely. Here is the did the breakdown happen? Right, so this is a sort of a little bit of a vague okay, this is an important resistance, right? Clearly a nice up move from a multi-year base, and this is breakdown, retracement of that breakdown. Okay, I need to revisit this slightly. If you put this up, right, a better fit in terms of a breakdown, retest of that is acting like a support now, and a further down move. So realty stocks, definitely another big opportunity to look at. So realty and metals spending breakdown, capital goods spending breakdown, but I think especially metals and realty, and of course power, right? These are the three where you have very strong shorts, and that will definitely be the way to go in the coming week, and who knows, the coming months. Have I missed anything? Oh, pharma. How could I? Right. So the pharma index moving up, you know, just amazingly well. And there's definitely a group of people in BIC who made a good amount of money and over 100% returns in the last 4 days trading pharma, as discussed in detail in last week's part 2 IMR. And you can see this massive Marubozu after Marubozu after Marubozu setup. Amazing strength, amazing strength. And just 1 day of, hesitation, that too a pretty good, almost shooting star, no confirmation, reiterating the importance of understanding confirmation in candlesticks and other places. Shooting star, 1 day pause, and it's just going, and it's becoming even stronger, this up move. So it looks like it's never too late to enter. There's always the dilemma in such a situation: am I too late? Should I wait for a correction? We sort of discussed the pros and cons of that in detail in last week's IMR 2 part 2, and some of us got in, some of us hesitated. Those who got in have made money. All right. So again, same dilemma. Maybe it will correct, but all said and done, even if it does correct, that will be a opportunity to add more to your long positions. Right. So IMR and oh yes, lastly IT, CNXIT. So CNXIT heading towards a new life high, very much looks like. Right. We talked about those flags and consolidations. The dollar strengthening, the rupee weakening is definitely helping the IT space, anything export oriented, right? We don't have an oil and gas index, but if we did, then we'll probably see things being negatively impacted in oil and gas, anything that is import um, heavy. So any exporter, and even anybody doing, say, garment exports or tourism with a lot of foreign clientele, well, this is looking really, really good. So CNXIT looks like the only sector or only space in the entire Indian market as a sector, as a group, which looks like it's heading to new life highs. Almost everything else is at its very low multi-year lows, including pharma, by the way, right? Including pharma. So though pharma is going up, it's going up after having almost a 50% correction in the last 2 to 4 years, depending on the pharma stock. But yes, so that will push the index up. Of course, the pharma and the IT going up helps the index go up, the Nifty Sensex. But every other index is headed down or is breaking down. So this upside that is going to happen is extremely limited on the Nifty. Maybe this level that we are speaking about till about 11,200 is extremely um, transient, in the sense that it'll go up, maybe it'll go a little higher, but that up move is clearly not sustainable when you look at the internals of the Nifty, right? And as and when that reverses, you're just going to, when the internals get worse, or say the IT or pharma starts to correct, then you can definitely expect the Nifty also to start correcting. So a lot of evidence internally that any upside overall is limited. As a matter of fact, the evidence is building that the downside is coming, and who knows, maybe around the corner, or it might be some time away. So take appropriate actions, getting out of your longs where appropriate, setting up stop losses where appropriate. And for those of you who are confident about the shorting and the shorting process, well, lots of beautiful opportunities today, tomorrow, and definitely in the weeks to come for some very, very, I must say, um, almost textbook perfect shots, right? So thank you very much. With that, we come to the end of part 1 of the IMR. I didn't do the global indices, I know. I mean, there's so much compelling evidence on the Nifty stocks itself anyhow. So maybe next week we'll also look at some global indices, but I think Nifty and sectoral indices for today was more than sufficient with the strong setups which are there. So comes to the end of part 1 of the IMR for this week. In the India market review, you have the contact information if you need to get in touch. And for those of you who are hanging on, you will receive the link for part 2 in a couple of minutes, and we will jump into that. Thank you, and see you on the other side. And have a great weekend. and Mokarimakka for the next trading week. Goodbye.